I am not a trader, at least not this particular season. I have been in the past, and I do trade, I do hold leaps, but this particular season, I'm not trading them, I'm holding them for the long term. But that means I'm not that interested for my own portfolio, that is, with regard to whether Tesla and or the market is up or down or how much it's up on any given day. However, I do love the drama, the intrigue, and the fun of watching the performance of the markets and of Tesla so that I can get a better understanding of how various aspects of the macro and the economy and the world economy, et cetera, are impacting both the market and Tesla stock. It's a ton of fun for me. And it's a ton of fun for me now because I get to report my theories to you and you get to respond to me in the comments. So please comment where I get it right, where I get it wrong. But it's going to be one of those weekends tomorrow and and then Monday and then Wednesday. Wow, we have a lot of stuff happening that's going to impact both the market and Tesla in a pretty dramatic ways. So this is Randy Kirk. Let me know if you like this kind of content and the fact that I do it every morning at this time. Let me hit the like and subscribe button and hit the notify button. And I'm going to wake up in a minute and get all this right. So, and of course, would love to have you part of Patreon. All right. I can't help but continue to mention that Tesla has become detached from all indexes. This morning, I know it's only the first 10 or 15 minutes, but right away, the NASDAQ was kind of flirting around with the green and the red. The Dow was about the same, S&P, but Tesla was already off to the races. This has been happening now for over a month, and so it's really hard to make any kind of conclusions or draw any kind of conclusions about where Tesla is going to go based on where the overall market is going to go. Tesla is now kind of on its own based on its own fundamentals and also, of course, the technicals that do matter because, as I've pointed out in the past, at least it's a self-fulfilling prophecy. All right, so where will Tesla end this week? I just realized this morning it was kind of a like, oh my gosh moment. Do you know that the magic 300 mark is also the magic 1 trillion valuation mark? Anyway, I'll give you my final analysis of where Tesla might be going today, tomorrow, and Monday and Wednesday toward the end of this analysis. All right. All kinds of talk about the Magnificent Seven. We've got Alphabet, Amazon, Apple. Look at that. 3 start with an A. When I named companies over the years, I was always looking for company names that would start with an A. I had American Quality Products and AC International, and I could go on and on. But anyway, so you got Alphabet, Amazon, Apple, Meta, Microsoft, Tesla, and NVIDIA are the Magnificent Seven. And why they're talked about right now is because the run-up in the NASDAQ and the S&P since the beginning of the year has been largely on the back of those 7 stocks. We haven't had the rest of the broader market take part, at least to as great a degree, in this rocket ship that actually started back in September as the various indexes have been going up higher and higher and higher. The Dow, of course, has not done as well. The NASDAQ has been detached from the Dow during this period. We've seen a big rollover from traditional Dow stocks into the more supposedly aggressive technology stocks like the NASDAQ. All right, so what does the Magnificent Seven even mean? That's a good question. We would like to see a broadening out. If we're going to have a continuation of the rally, a continuation of the bull, you do need to have it go to the broader market. How will that happen? Well, you need to have good earnings reports in the upcoming month when most of the stocks report in the on a fiscal basis that's the same as the calendar. So tons of companies will be reporting over the next 5 weeks. If you start to see some strength in broader names rather than just the Magnificent Seven, and that starts to show up in the stock market, then of course the bull will be accelerating. We had this morning the news that the GDP was revised upwards significantly. I always wonder when they get it this wrong. I mean, The second reading of the GDP was at 1.3%. This final reading of the first quarter GDP was up 2%. That's a 50% increase in the number. Well, the reasons for it were stated as consumer spending and exports were both up more than expected, or more than had been earlier reported. Consumer spending, what have I been saying? The consumer is out there. The consumer's got plenty of money. The consumer is getting paid more. They've got the jobs and they're not afraid of losing them. And if they lost them, they think that there's plenty of jobs out there because there are. And so you have people that are going to spend pretty much what they earn. And when that happens, then you're going to have a rising GDP. I continue to say, I'll say it over and over again, it's very hard to have a recession when you have full employment and earnings rising faster than inflation, which has been the case now for several months. Jobless claims, which was the other big report for today, fell by 26,000. More indication that people are working, they got plenty of jobs, and they're not being laid off, and the economy is stronger than anybody's talking about, or anybody, well, not anybody. A number of us have been saying it for months. This is not a recession. We're not in a recession. We're not going into recession. It's not even going to be a soft landing. It's not going to be any kind of landing at all. It is, and the bull market's saying it, and the bond market is saying it. And of course, this morning, bonds are up strongly, or at least the last time I looked, bonds were up strongly. And that would be in response because they're worried that the Fed will then increase rates in July and again in September. Because the economy is too strong compared to what the Fed would like it to be, and that means inflation will be under pressure. And it's true. There's no question that if the overall business climate continues to be strong, then you can get into a normal situation where there's not enough supply to meet the demand, and that can create inflation. Well, the Fed would like that to stay around 2%. Every indication from everything that I'm looking at is that inflation is headed down towards that 2% level. Will we hit it in 2023? Will we hit it in 2024? Well, that remains to be seen because the economy is dynamic and lots of things can happen. But the efficiencies that are going into the economy now by the Magnificent Seven are creating massive efficiencies. Not, of course, Meta, but the other ones are creating ways for small businesses and big businesses alike and government to become more and more efficient if they take advantage of the opportunity. Even the transition into BEVs is creating more efficiency. So watch for ChatGPT and BEVs and the electrification and all kinds of other aspects like this to create efficiencies, which creates wealth and which helps to keep inflation under control, even as people have more money to spend and want to go out and there's not enough supply. We're seeing that supply-demand imbalance this summer with regard to travel. Lots of prices are up, and that's going to be one part of the economy that's going to show inflation, but the rest of it is not. For instance, gold. Can anybody tell me why gold is dropping? So it's dropped dramatically, and typically gold is a hedge against inflation. So that would indicate once again that people are not concerned about hedging against inflation. So otherwise gold would be going up. It's also the dollar is going up, so that would drive the price of gold down in dollar denominations. But funny thing is, I did a search this morning, and there hasn't been an article on gold going down on Google that I can find for over a month. So if you know what's going on with gold, or if I just got it right, please say so in the comments. I'd like to, or if you know of an article or somebody that's talking about it right now, that would be good too. So as the economy gets stronger, apparently it's getting stronger, and the auto fleet gets older, which is absolutely true, then earlier forecasts that I've made and others have made that this could be a good second half for auto sales seems more likely. You're seeing the price of used cars go up again. That must be because people are trying to at least trade up to a newer car because their car is just getting old and they need to get out of it. And I have actually incidences of this in my own family where 2 of my 4 children have recently been saying, hey, the car is giving up. I need to get a different car. So it's not going to be affected by, as I've said this over and over again, it's not going to be affected because the Fed decides to raise by 25 or 50 basis points. The decision to buy that new car or to buy a newer car is not going to be affected by a slight increase at this point. The numbers are baked in. People are already going to make the decision based on the monthly payment, whether they're buying and putting a loan or whether they're leasing. What is that monthly payment? And it's only going to go up fractionally at this point based on continued increases. So probably going to be a strong auto market in the second half, which is going to contribute what? It's going to allow Tesla to continue to either keep their prices where they are or raise them, because we're already seeing the inventories go away. We're already seeing Tesla's pushing back if you order today, it's going to be July or August before you see your Model Y. Tesla can continue to raise the prices a couple $100 here, $300 there. It all matters. And that will, of course, continue to buoy the stock because that's going to help with the margins. So why is this weekend such a big deal? Well, part of it is because the PCE is out tomorrow, which is the Fed's favorite way of understanding what's happening with inflation. We're looking for a print somewhere under 4% year over year. If we could get core PCE under 4%, that would be amazing. The stock market will go nuts tomorrow. If it is significantly over, if it's still in the 4.5, 4.6 range on a year over year basis, core PCE, then the market will probably be neutral or sell in the news. If it's above that, oh no, it won't be good. So, but we're also going into a 4-day weekend. So trading will be super light on Monday because of 4th of July on Tuesday. People will treat it like a 4-day weekend for their travel plans and whatnot. So you can be guaranteed Monday will be a very light trading day. So people on Friday will be particularly nervous about where they're positioning themselves on Friday night, given that it's a 4-day weekend and so much can happen. So anyway, watch for maybe a little more volatility at the end of Friday. It's also the end of the quarter. So you have a little bit of, might still be some window dressing taking place by some of the large investment firms. Anyway, so that's part of why it's going to be exciting. But of course, we also have the numbers from Tesla on Sunday, which then Monday on a light trading day, we'll see the results. So if in fact, we get great numbers on Sunday and on a light trading day, sometimes you'll see Tesla go crazy. And of course, the opposite. What if it's 425 or something like that? You know, some shockingly low number. Well, you can see a huge sell-off, especially on a light trading day. All right, Cathie Wood is selling more Tesla. Headline. We can always get a headline if we show that Cathie Wood is selling Tesla, and then we can have the article not explain why. Every time. I just checked it again today. Cathie Wood has been selling more Tesla for the last week and a half. Why? Because she is required, her funds, they require that she maintain any stock. No stock goes over 10%. Well, if the price is going up and up and up, and you've got the same number of shares, at some point, if you own 10%, now you own 12%, or 12, it's 12% of your fund. So she's forced to sell to get it back under 10%. Well, she's not even back under 10% yet, so she's going to continue to be selling. Just know that's true, and it has nothing to do with her commitment or her feelings of where the Tesla stock is going. It's all about the requirements that she has. All right, let's see a couple more good items this morning on Tesla with regard to winning some categories. So the S&P Global Mobility Report says in the luxury brands category, Tesla topped the rankings once again with a 68% of recorded, what you want to call it, where people are committed. Tesla's their brand, and they're going to continue to buy the brand. They're loyal to the brand Tesla. Tesla was the only brand in the study that enjoyed a loyalty over 50%, with Mercedes-Benz, Lexus, and Cadillac following, but under 50%. Toyota dropped another position. That is not shocking. Furthermore, Tesla is the only brand in the United States that is keeping more customers than it is losing. So what does that say? That's pretty significant. That is a significant deal. As a marketer, I can tell you, they're the only brand in the United States keeping more customers than they're losing. which is surprising, it says in the article, considering the Austin-based EV brand hasn't released a new vehicle since 2020 when deliveries of the Model Y started. Oh, well, you don't need to change the look of your car every 3 years. Right now, it seems like 7 years is plenty enough. And I think it's going to get less because I think people are going to care less about that. Okay, Model Y also won the Auto Vista Group Residual Value Award in the compact and large battery electric vehicle SUV category. It said Tesla Model Y remains a firm favorite among BEV customers looking for a durable, convenient, efficient, and safe vehicle. Hey, couldn't say it better myself. Maybe that's the headline for the upcoming Tesla commercials. So Tesla needs to go test that 275 level again. That should happen today or tomorrow. I know that would be a pretty big stretch for today. Let's take a look real quick where things are happening right now before we wrap this up. Whoops, Tesla has now sold off a lot of that early 4. They were up over 4. Now they're up only 69 cents. The NASDAQ is back down in the red. I have no idea why these things are happening. It could just be a little profit taking. And again, today and tomorrow could be quite volatile, and Monday could be quite volatile. And I was just going to check for you really quick what's happening with the bond market one more time before we close. And it looks here like bonds are up very strongly. It's at 3.848 on the 10-year. That is now out of the trading range. So the bond market is finally saying, yes, the Fed is going to raise. So that is probably why we're seeing this difficulty with the market continuing to make the gains, difficulty with Tesla continuing to make gains. So maybe 275 is off the table, at least until we see what happens tomorrow with the CPE. Okay, and then I think that if you like this kind of content early in the morning, please hit the like button and encourage me to get up early and do this, and then hit the subscribe, hit notify, and then join Patreon. It's been great talking to you this morning.